This was a week for records. A record number of days without a greater than 1% correction on the S&P 500, at least for 2025. Record selling. Professional, retail, and hedge fund investors sold $3.8 billion in U.S. equities last week, and we saw some of the largest dark pool transactions of the year. And record investment in software and technology. If you look at this chart, AI, it's clearly in the driver's seat, and all that spending, it's having a meaningful impact on GDP. Speaking of which, GDP and durable goods orders beat expectations on Thursday. Unemployment came in cooler than expected, and PCE inflation today came in exactly in line with expectations. Still, markets saw their worst three-day sell-off since August, thanks to geopolitics, some national security concerns, and a bunch of domestic gridlock. So should we expect more volatility in the week ahead, or is the correction over and past us quicker than it started? Let's look at the key charts for stocks, commodities, and crypto to discuss just that. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to The Trading Apologist. My name is Tom, and I hope you all had a good week despite the bumps we saw towards the end there. Before we dive in, if you do find value in the content, likes, comments, and subscribes, they are very much appreciated. It really helps out the channel, and it helps this content get out there to more people. Also, a big warm welcome to anybody who is new here, who came over from DCA on Monday. That was very kind of James to have me, and it was a lot of fun, and I'm excited to see you guys here. If you aren't familiar with the process, I kind of go over the macro, then we get into the charts of the key stocks we're watching. And if you have any chart requests for assets that you're looking at that you maybe want me to go over in the future, put those in the comments below, and I try to get to those in the next video. As the channel grows, we will see if I have time to get to all of those, but I always try, especially if it's a meaningful asset with a good entry to consider. Now, as I mentioned on DCA on Monday, the historical stats, they are pointing towards a correction potentially landing in October of this year. And if you missed that, the abridged version is if we parse out the last 100 years of post-election year data, years that have had a positive August, which we had this year, those years saw the traditional September correction push out to October. Now, today, after our correction, we held structure on the S&P 500 and the NASDAQ, but could a correction still happen in the coming weeks? We have so much going on geopolitically right now. The US government may shut down next Tuesday. The 30th is the deadline for another government spending bill. And we also had that record selling that I mentioned in the intro happen into the highs of the markets midweek this week. And it's almost like someone knew something. Whenever I see those dark pool transactions happen at highs, just my spidey senses perk up a little bit. Now, am I personally selling? No. I'm not selling. I've been saying that any correction we see will most likely be short and sharp, and I'm basing that just off the current market conditions and everything that we have seen post April 7th. And dips should still be considered for buying unless proven otherwise. But let's look at where we are on the larger scale to see if we should be bullish or bearish as we move into 2026. Now, to help us forecast into 2026, I really think it's worth considering this chart. It maps out the historical performance of the S&P 500 after the start of rate cutting cycles. Now, we obviously just started our cutting cycle last week, so we're at the month 0 mark on this chart, and I've drawn a yellow arrow in there just to pinpoint that for you. And as you can see, the only negative line is the orange one, and that one corresponds to rate cuts happening as a recession is forming. So the simple test for us over the next 3 months is, are we heading up in the charts, and does the macro backdrop point to a recession coming? Those simple two items will give us a pretty clear picture of what to expect over the next 18 to 24 months. And if we add to that the stronger than expected GDP numbers this week, that really bolsters the bull case for no recession incoming. Now, if we do rally and follow this path, that would lend weight, at least to me, to the thesis of the traditional 4-year crypto cycle potentially extending. It's really hard for me to imagine a scenario where markets are rallying for 24 months while crypto is selling off. Conversely, a recession would line up almost perfectly with a classic 4-year cycle. So let's keep a keen eye on the indices as they progress into December to see how this is shaping up. And on the crypto front, I think we'll really have an answer on what the cycle is doing in the next 4 to 6, maybe 8 weeks already. Now, in the near term, however, markets do hate uncertainty, and we need to get the US government shut down and this business with Russia behind us. Again, if we see a correction next week, I've already got my plan on what assets I want to swipe up. I'm ready to go there. So let's get right into the charts. Today, I'm going to go a bit lighter on the equities because many of the names we've been tracking are still early in a correction. They're not at the best entry points where I would consider a trade. So I really want to focus on the charts where there is opportunity. And incidentally, a lot of those names are coming in the form of crypto or crypto adjacent stocks. So let's get right into the charts. Okay, jumping right in with the S&P 500, where you can see our structure is still intact in terms of forming a higher low. So we still have our stair step in place, and we will have to see how this shakes out. Now, I always have the 20-week moving average on my chart for the S&P 500, and the 20 weekly is really a place where Wall Street buying occurs and they step in hard. We haven't been down there since April, and we know that the street is behind in terms of equities. So there is a world in which we do at some point get pushed down there. We have record retail in leveraged funds and using margin, and I could see the street taking advantage of that to shake some people out of positions. I don't know if that's going to happen, but we do need to keep that in the back of our mind. And if you ever get down to the 20 weekly, that is a perfect buy the dip opportunity. But today, folks bought the little dip. And what I mean by the little dip, the retail investor normally steps in at the 20-day moving average, which I just turned on here, which is this yellow line. And you can see how we've been riding the 20-day moving average. I mean, really since May, just finding support at that the whole way up. And we bounced perfectly from it on Thursday now into Friday. And we closed back above this previous swing high from Tuesday, the 16th of September here. So all in all, a strong close for the S&P 500 today. I know some stocks underperformed. I'm in some riskier plays. And even though I'm 30% cash right now, my portfolio was still down like 10% for the week. So even though it doesn't look bad here on the S&P 500, some names definitely got a flogging. If we go over to the NASDAQ has a very similar structure, but actually held up a little better than the S&P 500 in terms of where it bounced. And we also closed pretty much into the highs of the day today to end the week. So that's a good sign on the NASDAQ as well. All right, moving on to the DXY, and the DXY has finally found some strength. We have almost a bit of a double bottom on play. We definitely undercut it on the second low here, but that's actually fine. You don't get volume here on the DXY, but on equities or crypto, if you see a double bottom and the second bottom drops a little bit below, but is on lower volume, which we don't have here, that is actually a strong sign. It usually points to a bear trap where, market makers just sweep low and then push it back up. Low volume usually leads to a false breakdown or breakup. Anyway, but this is the DXY. We don't have volume. But we talked about last week, no, it was Monday, where we had these 3 days up. And anytime you see 3 bullish candles like this from a top or 3 bearish candles from a bottom, that normally is a sign of strength in this case, or weakness at a top, and normally leads to a bit longer turnaround or correction. We've still been forecasting a macro breakdown for the dollar down to this next zone at around 94. And since we probably have some new people here, we're taking that way back from this consolidation zone in 2022 before that massive move up on the dollar. But it seems like, at least in the near term, we should expect to see a little bit more strength in the US dollar, and we could measure out the price target from that double bottom, but let's not get ahead of ourselves and see if we can pass this peak first. But in the near term, in terms of the first major resistance, I would say in that 98 to 99 range right there, where we have this red zone drawn, which played strong support for us and resistance here. That would be the first major hurdle for the dollar. Now, we have seen oil bounce from the lows of last week, which it was really forming a clear bottom. Congratulations if you were on that trade. But XLE, the energy sector, has been in this longer downtrend since November of 24, and it just broke to the upside. We're in the upper band of the Confluence Model Cloud. This also aligns with seasonality where oil and other commodities perform well. Natural gas had a pop today. So there is momentum in this space right now, which unfortunately also leads to higher input costs and spurs on inflation. But if you're looking for momentum in markets and you want to play some leveraged funds, I know a lot of people who follow James don't really do that, but commodities can be a great place to look when there's not much else happening in markets. I often trade natural gas long and short with the BOIL and KOLD leveraged funds. So there's always an opportunity out there. And you can start looking at things that are less traditional, especially if we get in a bear market. Commodities are fun to trade in that environment. All right, I'm skipping gold today because it hasn't done much of anything for a few days, but I think it is worth talking about NVIDIA really quickly. They did spike at the start of this week on that announcement of the $100 billion investment in OpenAI, or I can't remember. It's this big ecosystem where they fund OpenAI and Oracle and servers. And anyway, it's just round tripping money essentially. But even on that news, we hit this exact same overhead resistance right below $185. So if we want to see the broader markets rally, I think we need to see NVIDIA break out from this overhead resistance. Other semiconductors have really been doing well, MU and TSM namely. And you can see after everything ran up from April in this consolidation pattern, NVIDIA got into a bit of a daily downtrend for a while in terms of lower low, lower high, and then we saved it and we rallied back up. So this is really the question. Can NVIDIA push through? And if we want to see the NASDAQ and the broader indices keep on rallying, I think this needs to get through as well. But I still maintain that the better gains are to be had in the smaller players in the semiconductor space after NVIDIA has rallied this much. All right, moving on to Bitcoin, and I'm just going to repeat myself really quickly for the people who haven't been here before. But after we have had 3 down weeks from the peak on Bitcoin, this is kind of the inverse of what I was talking about on the dollar. 3 down weeks in this entire bull run, 83% of the time, have led to one more sweep of the lows, lower prices. And it looks very much like this week, like we are setting up that, even though we did bounce off key support. So we still need to keep this in mind that this might happen. But those corrections have traditionally been sharp and short and have recovered quickly. And we don't want to see this drop too low to really break structure on us, but let's focus on the good. We did find some support. If we look to the daily, we did bounce, we deviated a little bit, but below this daily RSI support that has been our support in this entire move up since actually February of 2025. We haven't really broken below this level on the daily RSI. So it would be good to hold that. We slightly deviated below some, support levels, still within tolerance. I think the thing to do now is to draw out some fib levels for this last swing to see where our line in the sand is for a last level of support. And if we draw that out like this, you can see that the 50% level, which is the most important level that I would have loved to see Bitcoin hold a couple of days ago, we did bounce from that. And then we broke through and sold off. Now we have the 382 just below at 108,226. We are getting dangerously close to breaking this last swing low. So just in terms of a structure perspective, if we can bounce here at the very latest, maybe we are bouncing right now, and form a higher low, that would put us in a much better place to recover. If this weekend or early next week we break below these lows, I would anticipate a further correction, and then I would be looking to our next volume cluster and our next fib level, which is at 104,300. And this 102,000, let's say 500, just for round numbers, that has been a key line in the sand. Anywhere below that, I would really start getting concerned for the broader structure on Bitcoin failing. But right now we're also at the center band on the Confluence model. One other thing if you haven't been here before, which is a fair amount of you that just joined this week, the RSI on the weekly is really important for Bitcoin. So if you see this blue line I have here, and I can just make the RSI a little bigger, and that is living roughly at 43.5, let's just say 44. Anytime Bitcoin is above that, we are still in a bull market. So if we just compress our time scale a little bit, and let's see our price action. So here is our bull run. Anytime we're above 44 on the weekly RSI, just like I drew out that line for daily uptrend, we are generally speaking in a bull market. Anytime we drop below that zone, we are in a bear market. And that was true for the last cycle as well. Bear market happened below here between this other dip from 19 as we drop down. So this has been pretty darn clean. If we ever get below 44, watch out. Anytime we go above 62, that normally corresponds to more explosive price action. So you can watch this weekly RSI, and I'm watching the weekly close closely. And really what I'm looking for is a breakout of this downtrend on the weekly. Anytime we've drawn these downtrending lines on the weekly RSI and we have broken out positively from those, that has corresponded to the end of the correction. You can see the same thing. I feel like I've done this way too often, but you know, there are new folks here. So this is one of the most important things on the Bitcoin chart. Through this whole consolidation, that week, exactly when we break out, yeah, it didn't nail the yen carry trade low, but led to that next rally up. So if you draw this line on your weekly RSI, you have 44 down below, you have 62 up above this diagonal line. That's honestly all you need to trade Bitcoin on the higher time frames. Okay, if we look to Solana on the daily time frame, if we're just considering fib levels, we're doing okay on the fib levels. We bounced off the 50% here on Wednesday. Then we broke back below that, and we've roughly bounced from the 382. And now we are testing today, Saturday, for the daily candle, the 50% from the underside. So getting above the 50% would be a good sign of strength. And then we have the confluence model upper band and this downtrending resistance overhead. That would be our next hurdle to get over. If we look at this on the 4-hour, the 4-hour was extremely oversold in terms of RSI and mean reversion. And the last time we were actually this oversold, I mean, we had mean reversion dots along this run up, but really we hadn't been this oversold since the bottom right here on the 2nd of August. And that broke our uptrend. We failed our underside support from this uptrend. So now the question is, can we establish a new uptrend from here? Or like we were talking about on Bitcoin potentially, are we going to have one more sweep of the lows? And unfortunately, with how this is setting up on the 4-hour in these confluence model clouds, we normally take at least 2 swings in the lower band of the cloud, sometimes 3, before we break into the center band and recover. So that's just one thing I'm keeping my eye on. And I'm wondering if early next week, if we get a correction, if that happens, are we going to test this 180 range right here, which 180 has been key support for us in the past, key resistance as well. It would align with this general structure that we often see on Solana. I would love to see it just recover more quickly than that, but this seems like the more likely path forward, and that, along with the time analysis that I've been going on about, low coming in next Tuesday, that would all align right there. If we just go back to the daily too, I don't love that we broke back into the center band on the confluence model right here. That's not the best sign of strength. It points at some consolidation, then a potential breakdown on the daily, or if we have a lot of strength, another move up. So Solana, it was one of the strongest, but now has really started to show some weakness. So we need to watch it carefully over the coming days and weeks. All right, and I just pulled up a clean Solana chart here because this isn't going to be a full time analysis lesson, but I just wanted to go over what I've been talking about with a reset of the time cycles coming next Tuesday. And markets, especially crypto, generally move in 30, 60, 90-day chunks. And sometimes they hit intervals in between that. So instead of 60 days, 45 days is a common one we see. So if we just measure from our bottom here in April to this top right here, what do we have? We have 45 bars, or 6 weeks. And a balanced correction of a 6-week move up, you would anticipate that the first sign of a bottom would come 2 weeks after the top. That would be a balanced correction. And if we measure our next move down, this next move from the peak to this low, this is 14 bars, or 2 weeks. And that had all the hallmarks of a bottom, but then Israel-Iran happened. And so we continued down. And if you don't hit that 2-week mark, then we're looking to half the time. Okay, maybe 3 weeks. No, it didn't really land at 3 weeks, even though we had another significant bottom right there at the 3-week mark. But it ended up landing at 4 weeks, exactly 30 bars, 30 days from bottom to top. So we got our full correction. It was an overbalance in terms of the time and price, but it still landed within those time intervals. And then if we look at our next move up from here to the top, we have another 30 bars in that swing to the top. So what do you think the next correction is? The next correction actually fully respected the 1/3 correction. So 30 days up, we had 10 bars down. So what do we have right now? Well, if we look at what we have right now, we have to the top, well, 46 bars, but close enough to be within tolerance. So we're in that 45, 46 bar range. So we would anticipate at least 2 weeks down to the downside, or that would put us at 60 days. So if we map out 60 days for a balance correction, where does that get us here? That gets us to Thursday, the 2nd of October, for the end of the correction. So that's why I've been saying I'm watching that as a date for a potential bottom and a change in trend again for Solana. Okay, Ethereum, I'm just going to be quick on. It has also broken the daily uptrend back into the center cloud. So this points at more consolidation or further correction. So ETH isn't looking strong either. This was the line in the sand that I was talking about on DCA, this $4,000 level, which goes back to all these previous peaks. We broke below it, and now we have back tested it on a daily candle for resistance. It's a little above 4,000. I have it at 4,065. There's all of these levels. Don't think of them as an exact dollar and cent because we wicked above them here. Think of it as a little bit of a range. So if you just think of this as like 4,000 to 4,100 as a general support and resistance range, I think that's more helpful in charting on larger time frames like the daily. So if we can reclaim this quickly next week and flip it back into support, great. That's a good sign for Ethereum. But right now we have to anticipate further weakness from where this stands right now. And honestly, Solana, with finding some resistance right now at the 50%, I'm assuming some weakness until the charts can prove to me that they have some strength in them. If we do want to map out where we could find potential support, and I have talked about other levels in the past. Oh no, sorry, that was just a Patreon video I did midweek. If we're just looking at the fib retracement from the last swing low, we would be looking at 3588 right here, or 3600, which makes a lot of sense. We did bounce from these previous tops at 3,800, but really almost every $100 down here at 3,700, at 3,600, at 3,500, and then again at 3,300. There are generalized areas of support where some of these candles have closed, but let's just say 3,500 as a round number for support in the middle of that range if we continue to break down here on Ethereum. All right, flipping over to MicroStrategy, and I feel like I'm covering all the bearish names first, but MicroStrategy, if you recall in my last videos, I was saying I got in a little position here as my first buy in a couple of years, and I got stopped out of that this week when we broke below the trend line. So I just have those limit sell orders set so I can't get in my way and make an emotional decision. From where we are in the clouds on the 4-hour, we're still clearly in a downtrend. We just broke down again, so we would anticipate a couple swings here. In terms of next support, we have a little bit of support right here at $282. And then our major support is this trend line that has been playing support underneath the price action since the start of 2024 here. So long-standing support. We rejected from the 200-day moving average. We broke this local trend line. Even if we bounce here next week, we have to assume that a long-standing trend line like this, and this one goes back to, when was that? That was September of 24. So a year-long underside support on the MicroStrategy price action. We have to assume that this now is most likely going to be resistance. So even if we chop around, until you can flip this back into support, the chart is not looking great. We can revisit it if we get into one of these support levels to see if it makes sense for an entry at that juncture. But right now, it's not looking very inspiring. And on the daily as well, we just broke into the lower band on the daily time frame. And this might seem like rudimentary TA, but these clouds work out very well. We normally anticipate a couple of swings in the lower cloud, and that might align perfectly, with that target of the lower trend line before we can mount more of a recovery. So let's see. We just need to take it day by day, week by week here on MicroStrategy. But unless it can really prove something to us, and if you just get a quick bounce and break right back into the center cloud, that's a massive sign of strength. And it's telling you, even though we normally anticipate downward movement for a bit extended period of time, you need to get back on the trend because something special is happening in this asset. So keep your eye on both sides of the market there on MicroStrategy. All right, now let's get into some of the more exciting ones where we do have potential entries forming. So first, let me go to the 4-hour again on Celsius here. And Celsius was one that I got out just a couple of weeks ago. Like I mentioned, I don't think I mentioned it on Monday, but I got in January around $22. And in terms of timing, this was one of my best trades of the year, and got out right up here. This $60 level, that's the 50% from the all-time highs. If you go back on the channel, I've been saying for months that I was going to get out there. So between averaging out a little bit below and into these peaks, I got out at about $61. Then they acquired Rockstar Energy. Wasn't enough, too much selling pressure. They have some increased input costs too that are hampering margin a little bit. But they, in terms of acquiring Rockstar Energy, they acquired another women's brand that starts with an A that I can't think of. Their distribution is increasing. Their marketing and partnerships are fantastic. Celsius is volatile, but we've been saying that 52 is the first zone to get back in. And I took a little bit of a nibble, not much, because I was anticipating we would go down at least to the next support at 48. And I was basing that, again, on the Confluence Mall of Clouds. We have the Confluence Mall Cloud, and I was anticipating we'd come into this actually today and potentially reject one more time. I don't know if those limit orders are going to get filled now, because we closed the daily back on the other side of that trend line and in the center of the Confluence Mall Cloud. So this is a good sign. Now, if next week, if we bounce a little bit more and turn that into support and continue away, if you didn't get in, this is going to be your next best entry. And we have a macro higher low from this day in August where we really took off after earnings. And I think in the longer term, this can still do some interesting things. If we just look at it on the larger scale here, even though it had this massive sell-off in the earlier part of the year, later part of 24, it's recovering quite nicely, and there is no breakdown in this structure. So yeah, I would have loved to get in at 48, maybe bounce around this trend line, but we have to follow the price action and the flows. And if we confirm that breakout next week, I am going to deploy a bit more of my position. And if we're looking at the Confluence Mall Clouds on the weekly, our next real resistance, and it's actually interesting how the Confluence Mall works out. I've had this dotted line in as potential resistance, between these peaks and these bottoms right here. I actually just wanted to get alerted before this bottom right here to potentially get out of the position if it got there. And that's aligning exactly with where the Confluence Mall Cloud is. So these moving averages are really powerful and why I like to trade so much with IADSS. Now, that said, last thing I will say, the weekly is definitely overheated in terms of the RSI and mean reversion. But as you can see on these past moves up, we've only hit that for the first time. And this can hit the weekly and consolidate for a bit, weekly consolidate for a bit before moving higher. This move is seeming really strong. I mean, maybe we chop around for a bit longer, but I don't think just because the weekly's up here, this is going to be the end of it for the next 12 to 18 months. All right, looking to coin. So coin had been forming this base since August, and then we had a nice bounce and a pullback with, the rest of the market, but we've been staying generally above this range. I had gotten into some calls already, expiring on the 20th of March, 2026, with a 350 strike price. And I added to those today to end the week. And I'm hoping that coin is going to maintain this structure in terms of the recovery. We broke these previous swing highs here. So we had higher highs. Now the hope is this is our higher low entry, and we are going to continue to recover from here. So let's see if that can form up next week. And the daily RSI is still in a generalized uptrend. You can actually, just like we do with price action, you can see if you can find a trend line for support on RSI. So I think on coin, this is actually a real clean one. As long as you're holding this uptrend on the daily RSI, you're not anticipating a turnaround in the price action. I didn't even spot this when I got into my calls, but that's a great extra sign of confirmation. Mean reversion is nowhere near overheated. So all indicators are pointing to more upside price action on coin. You can see, just like we were looking at with some of those other overheated stocks, took its couple swings in the upper band, broke back down, now is consolidating, but it seems to be consolidating in strength. If this was breaking down and testing this lower cloud trend line, that would be another story. But we have positive price structure in the upper band trending to the upside. So at least right now, I am assuming this is still bullish on coin. Okay, moving on to bull, which had a nice recovery this week. I'm back to being positive on my position. Just for those of you who haven't been here, sorry, I've been saying that a lot. But I got in for my first trade here where we broke out of this basing structure, actually a very similar structure to what we saw on coin. And I held the trade all the way up to here. Where was I? No, right here. On this before, I was selling into this. I saw this previous swing top, and I was just assuming we would see some selling pressure after bull had been so beat up. So I got out of my first options trade already, and then I got back in when we bounced off this trend line, and the trade was going good. And then I left for 2 weeks of traveling, and I didn't watch this breakdown on the trend line, and I didn't close my options position. Normally, if I'm just in spot, I would set a limit sell order, but my options I normally handle manually. Anyway, so I was underwater on this trade where I don't like to be, but we luckily formed this base and started moving away. And today, we actually, if we go into the 4 hour, we can really see it. We just closed above this trend line. Price action faked me out. I was thinking, oh, we broke above it. And then we had that hard sell-off right after the market opened. And I was thinking, gosh, we rejected that trend line. Our 4 hours overextended. We just can't do it. The 4 hour is overextended and it needs to cool off a little bit. So maybe we chop around a little bit more, but we're also getting into the upper band of the confluence model cloud, which normally, even if we chop, leads to more price action to the upside over the next couple weeks. And if we look at it on the daily RSI has a lot of room to run back to the top of the range. And now I have made this chart look horrible with all my squiggles. So I'm going to clean those up and we'll move on to the next asset. All right, we're going to move on to another new one, similar name, different stock, bullish, BLSH. So one is BULL, this is BLSH. Always reminds me of Bull SH. It's kind of a bad ticker. Anyway, that's not why we're here. So this IPO crashed down, formed a solid base, and this is that same kind of structure that we initially looked for on Bull, where we had this consolidation range, we had a double bottom that exceeded the price target. We have formed a higher high compared to this swing top. There's not much price action on this, but the same principles apply. Now, we had a little bounce today. The question is, are we recovering from here or are we going to drop a little lower? If we drop lower, this previous high right here and the 236 level on the fib at $56 would be a very good entry. I already got in this a little bit, and my cost basis, because I bought I need to check my average. Give me a second. My cost basis is actually, I'm up 66% on this because that's some IPO shares. My cost basis is $37. But I'm watching this week to see if I should maybe add to this just a little bit, but it looks like it's turning around. So if you are not in this trade and you are interested, fintech is a hot narrative. Coinbase looks like it's turning around. Bull does. Your Robinhood has obviously been outperforming. This could be a good zone, or it might just be worth setting the limit order here at $57 to see if you get that fill. All right, staying on the crypto and fintech adjacent lane, let's just look at GEMI, which has really been hammered since its IPO, but is starting to find a base here. So we actually, right at the 786 extension, we had close to a double bottom and then a nice little recovery here. And now we've entered this tightening wedge range. And we're just on the 30-minute here. This is very new, so I'm charting it on the 30-minute. We're getting the confluence model bands squeezing, which is indicating some volatility incoming. Now, crypto could be at a bouncing point, and some of the other fintech plays are already showing positive structure. So I'm slightly skewed to this symmetrical triangle breaking to the upside. And I entered a little bit today as we were as we were bouncing off the bottom of that. I already have a little bit of a position from earlier, and I got some IPO shares on this as well. So I'm a little bit below my cost basis. I think I'm at like $25 to $28 now. So I've got a little bit of catching up to do on this one. But if you want to wait, whenever you enter on the bottom end of a pattern like this, you can set your stop just below. You have a very clear invalidation. The other option is if we break to the upside and backtest it for support, you can either play that break or that bounce. But this is one that seems like it's going to make a decision in the next couple days. And there could be a lot of opportunity in this just because of the percentages that these names move. So I would recommend keeping your eyes on this and seeing if it's something you want to take a stab at. Okay, one more that I wasn't going to cover, but I clicked on the tab and I was like, I did sell out of a position last week and this week, so I should talk about it. BBAI. So I've had a trade on it already earlier this year where we were forming this structure here after the April 7th bottom. There was actually a very ugly kind of complex inverse head and shoulders right in here that we played to the upside, and it overshot by quite a bit. I got out actually too early on this first trade. And as it was coming back down, we were oversold on the daily, bouncing off the 200-day moving average. I got into another position. Actually, I think I had my first buy on this wick down, and then we dropped lower and I averaged in. But I sold early as we were getting into this resistance here because I was in shorter expiry options. They were already up nicely. And then I sold the rest of it as we were breaking out right here. I thought we were going to get resistance at the upper end of the cloud. So I was just selling into this candle a few days ago. It was out on Tuesday. And ultimately, you would expect when you have a breakout like this, because it's been overhead resistance, that you would then turn that into support and continue into an uptrend. This is unfortunately showing excessive weakness right now with how it broke back into the pattern. And let's just look at the RSI to see what it's doing. We haven't gotten a mean reversion dot yet on the daily, but the RSI spiked. We're probably going to get a red mean reversion dot soon. But this could be worth another play. When something does this, it puts me on red alert a little bit, but it could just come down to the 200-day moving average and our trend line again, and it could have another bounce and it could try to break out one more time. But this is really the line in the sand. So if you get to this zone, that again is a fantastic entry for a swing trade, because if you get in right at support, you set your limit sell order right below, you're not risking much in the trade, and you have potential for to the upside. And really, you probably want to get in on the 4-hour chart at this point. Oh, and actually look at this. Everything's lining up. So we took our swing in the upper band. Now we're testing the center band. If we break into it, look at where the center confluence band cloud is coming. It's coming in right at that trend line. And if we bounce from that, great sign of strength, and this is going to turn around and probably head to the upside, or we break down into a further correction, which corresponds with the trend line breaking. So all these factors, the moving averages, the dynamic moving averages of the clouds, and the static trend lines, they are really acting in concert right now. This is a very clean chart. Just be careful because the balance sheet for BBAI sucks. Sorry, I shouldn't say sucks, but it does. It's terrible. And it's not a name you want to be in long term, but these swings happen quickly. So if you are into playing that, there can be some opportunities in names like this. And just even if you're holding spot, just in terms of percentages for this swing, that was 81% in that swing over 13 days, 2 weeks. So really moves fast when it gets moving. Okay, last chart of the day, CRCL Internet Group, the stablecoin. I have IPO shares in this one as well. Thankfully, Robinhood gave me more than one share of this one. Sold 10% of that at the top to cover my entry, and now have started adding to the position. We had this gigantic falling wedge, which broke to the upside and has a price target back at $200. And that kind of makes sense because you've had this big sell-off. $200 wouldn't be a higher high. This could very much just even, after all this price action, I'm never surprised when assets just kind of enter a longer term tightening range for weeks or months. So that could absolutely happen. But if we just look at where we are right now on the 4 hour in terms of the recovery, the bands are squeezing, which indicates volatility. We've broken out. And what have we done in terms of the structure? And I feel like a broken record because we've been saying that on all these assets, but it's a very similar setup. You've turned structure positive. You've had lower highs and lower lows this whole way down, higher highs, higher lows, higher highs. But if we look at this just in terms of a larger swing, in terms of coming down, we've made a higher high. I would consider this the last line in the sand in the middle there that we passed. And now are we in the process, as we came to the confluence model center band, are we making a higher low? And are we going to continue in an uptrend from here? So if you are not in this already, this zone right here, or perhaps around $120, is what I would consider a pretty darn high confidence entry. You are right on top of the highs of this range right here. And it can be that line in the sand for you, that invalidation zone. You buy it just above 120, maybe 121, assuming we get there and touch this. We might just bounce and you have to chase a few bucks. And then you set your stop just below it, 117, 118. And you're just risking, a little over, and potentially capitalize on a big recovery from that 120 to the $200 level. So trading breakouts, trading patterns and targets, that's a lot of what we do in swing trading. And you always want to try to get in where you have that clear invalidation, where you can preset your stop limit order. And I know I'm repeating it a lot today. We just have a lot of new people following the channel. So I just want to hammer that home because we trade in a lot of risky assets. So having strict rules for yourself, proper risk management, all that is very important to stay profitable and successful in your trading. I would rather take a bunch of small losses and stick around for the big wins than getting way underwater on a trade with these assets that can move, as we saw, 80% to the upside in 2 weeks. And if you get a move like that to the downside, that is no fun. Okay, so that is it for the charts. Before we wrap up, I just want to give a huge thank you to everyone in Patreon who is now making this all possible. If any of you are interested in learning more about trading or technical analysis, I would love to see you in there. As for the weekend, I am really watching crypto. We've really reset the charts from a price perspective. We've bounced off of key support. We've had the proper number of liquidations, and we've even had fear and greed reset. The only box that hasn't been checked for me is the time analysis, which would point to a bottom landing early next week, like Monday to Tuesday. So I guess we just need to see how things shake out this weekend and how we do for that weekly candle close. There is a world in which, depending on how things shake out with the price action on Monday, I may push Monday's video to Tuesday instead, just so we can really see if we do get a solid bottom forming in crypto that perfectly aligns with that time count reset. Anyway, I hope you all have a great weekend. I look forward to seeing you in the next video. Bye for now.